To the mutual fund norms, which are set to change. But Sanjay Shah, the Chairman, Managing Director, Prudent Corporate Advisory Services, on the phone line this morning to give us a perspective of exactly that. Sanjay, good morning. First, give us a
Good
perspective
morning.
of what this means, because versus the draft, these guidelines are favorable actually. Uh, it adds or it subtracts just about 1 to 1.5 bips for the AMC. And I know that you are not the AMC, but first give us the
Yeah.
perspective from the AMC standpoint. Isn't that largely positive with regard to where AMCs is concerned versus what the draft suggested? Your view?
Yeah. Good morning. Good morning. And I fully agree with you because if you look at the initial consultation paper, the impact was likely to be much, much larger. However, I think the SEBI chair also yesterday in the con call said that they heard everyone and probably the whatever which has been came out finally is very, very less impactful. So if you look at all the changes, only one change which is really going to impact everyone would be the removal of exit load based 5 basis points which were available to AMC. So I think that's the real impact. Other than that, everything else is probably they are trying to put it into a right perspective. So if you look at currently the structure of mutual fund expense ratio was a bit confusing because the asset management companies were allowed to charge GST. However, all other participants, including RTAs and wheel distributors, were not allowed to charge GST or other statutory levies because it was inclusive of charges. Hence, the real figure was not clearly visible. And I think the SEBI chair was very, very clear in communicating this message that we want to very transparently communicate that what is the actual expense ratio, and then over and above all other things which are statutory levies has to be separate. So in that sense, initially the expectation was the consultation paper talked about reducing by 15 basis points. Now finally it came out, I think, except first 3 slabs where the impact is still in the range of 15 basis points. All other slabs about 2,000 crore, they reduce that impact to 10 basis points. So overall, it's a very, very positive things. And it will definitely help us in giving a lot of clarity as far as expense ratio is concerned. Another important thing is that now they have made it very clear what is base expense ratio and what all additional you can charge. And we all knew that, right? Additional charges in form of statutory levies are always what you call the variable in nature because you don't know when the GST will increase or decrease or stamp duty will remain or not remain. Hence, now it is very clear there is base expense ratio and plus would be the statutory levies. So base expense ratio will remain very clear as far as the cost of entire operational part is concerned, and statutory levies goes in the hands of regulator or somebody else.
Sanjay, if you look at the impact on AMCs, it's around 1.5 basis points, which is there. But if it translates into the PNL, it comes to 4 to 5% of the PBT. It's widely expected that some of this would be transferred to the distributors like you. So do you see a challenge from that point of view that your margins or commissions may get hit because of this expense getting transferred to you as well?
Yeah, so I think when you're talking about 1 to 1.5 basis point of EMC impact, you're already assuming that 3.5 basis point would be transferred to somebody else. Because the real impact would be 5 basis point of exit load, and if their impact is expected to be 1.5 basis point, that means 3.5 will be transferred to rest all other players in the ecosystem, and distributors are the largest players. So I think we just want that there has to be an equal distribution of this burden this time, and they should not disproportionately transfer this burden on the distributors, because at the end of the day, if you reduce the earning of distributor disproportionately, then the viability will not remain. So I think we sincerely suggest that this time AMC should transfer less and probably try and bear that. However, coming to the point regarding the will I be able to bear this cost? Yeah, I think probably if you look at 3.5 basis point or 3 basis point transfer is something which is after a long period of time, because the last change came in 2019, and then after the AUM has also grown significantly larger. The best positive part of this industry is that, let's say, take an example of AMC. If their impact is 4 to 5%, and if the AUM goes up by 4 to 5%, that entire impact gets nullified. So that's the beauty of this industry, because entire earning is linked to the AUM, and we always believe that anything which is good for the investor is good for the industry, is good for all of us. And if we increase we need to put in more efforts to make sure that our AUM compensate the impact which will be there on us.
Okay, Sanjay, that puts that into perspective, but help us understand how meaningful are these new MF regulations on the back of this expense ratio being cut? How incrementally positive are they for investors actually? And also, how do you think the smaller AMCs are going to survive this sharp cut in the expense ratio? On the back of this, do you believe there could be some amount of consolidation in the industry, if any at all?
So I think coming to the impact for the small or big, so if you look at if you have the AUM at the scheme level up to 2,000 crore, then the impact is roughly about 14 basis points, because what they did is, in the first slab, they reduced the TR by 15 basis points. In the next slab, it is 10 basis points. And the third slab, it is 15 basis points. And then after each and every slab, it is reduced by 10 basis points. So in the up to 2,000 crore, impact is roughly about 14 basis points. But you can understand that when your total expense ratio is in the range of 2.10, 2.15, then back of the annual calculation says that your GST component also would be closer to 13, 14 basis points. Hence, I think it's not going to be a largely impacting the small or big, because it's going to be a neutral as far as your what you call the statutory levies and the reduction of TR is concerned. This exit load of 5 basis points is something which is definitely going to impact, but I think my belief is that it's good for everybody, and with 5-10% increase in the AUM, everybody would come at par.
Yes, but that will be needed, Sanjay. So that 5-10% AUM jump will be needed, and it's been a difficult market already. Sanjay, talk to us about how the GST mechanism works in all of this, because there is a GST component as well, which is now excluded from TER for the purpose of calculation. It's going to be BER plus plus. How will that GST work, and does it have an impact on you, is what I'm trying to get to.
So if I can talk about my example, say for example, if you look at my last year reported number, my earning was 1.09 basis point, including GST. Now this was an inclusive earnings from the asset management company. That means we are not required to raise an invoice over and above what we earn from them. So if I earn 1.09, I need to divide it by 118%. That means it is inclusive of GST. So I need to carve out the 18% of GST component out of this. So if I divide this by 118 basis points, that means my earning will come down to 90 plus 108 plus 18% over and above that would be 1.09. That means roughly my, let's say about, 1.06. My earning is 1.0. So 16 basis point was my GST component and 90 basis point was my earning. Now in the new situation, what AMC are likely to do, I don't know how finally it will get converted, but my belief is that they'll tell me that whatever you are earning, now your rate would be reduced to an extent of GST component, and you raise an invoice and ask for the GST separately. So both are going to be, for me, my belief is that I think my situation will be revenue neutral, and will not have any impact as far as GST part is concerned. However, the biggest anomaly in the industry was for the small distributor and the mid-level distributor. So let's say, give an example, Mr. A was earning, let's say 15 lakh rupees, and Mr. B was earning, let's say 22 lakh rupees. Now the 22 lakh rupees guy is required to pay GST from the same earning, which the 15 lakh guy is not required to pay. So there was a lot of arbitrage for the smaller distributor because of the inclusive nature. So the AMC will give you a 1% and they'll say, if you are falling in the GST, please pay GST out of this. And if you do not fall into GST, it is your income. So I think that anomaly has been very clearly resolved. And I think the SEBI chair said also that this was creating a lot of confusion in the mind of investor also, that what is the real earning or what is the real cost of the distribution as far as this, what you call the TR is concerned.
Sanjay, this has been a fantastic conversation. Thank you so much for coming in and explaining this to our viewers. But we spoke with, and Shweta, we'll come to you in just a couple of minutes. We spoke with A. Bala yesterday, at the India Economic Conclave. Let's go and listen into a slice of that conversation we had with him, because it's an interesting one given this context.
What was being proposed during the draft report and what has come out finally, I think it's made it more apt and clear in terms of the impact of the new circular is going to be very, very negligible from the AMC's point of view. On the investors' point of view, of course, they get the benefit of marginal reduction in the expenses. At the same time, I also made it very clear in terms of how the charges should be segregated between the statutory obligation that office have got. There is a lot of confusion, interpretation that what are the expenses we charge, how much is inclusive of taxes, how much is inclusive of service tax, and so on and so forth. That clarity has now come. So the interpretation issue, otherwise we always used to have, and that's something has been completely cleared. There is also, of course, concern about the brokers who have been, of course, stock brokers who have been providing service to the mutual fund money managers by providing various research-related input for money managers to function more efficiently. There was a bit of confusion in terms of cutting down the expenses. That also is now made it in such a manner. It is 6 basis points. Finally, they're agreeing as against 2 basis points as proposed earlier. That, in my view, it's a recognition, which I think SEBI is finally displaying through their circular, the importance of mutual fund in terms of channelizing the public savings into the capital market, the importance of various intermediaries that suppose actually the mutual fund industry to perform better, and that's something in the whole ecosystem recognition that SEBI has given to the circular is something very good. And last but not the least, they also now encourage some bit of innovation by allowing money managers to focus on performance-based fund in case they want to launch. They're giving more free hand to money managers to even consider such kind of funds in the mutual fund industry, which is never the case in the past. Therefore, I would say it's one of the most progressive circular that has come in. But I think at the end of the day, everybody will start looking at what's going to be the impact of this in the bottom line. I think as it stands today, on the basis of the cursory calculation that we have now done, it looks like the impact will be very, very negligible, 0 to negligible.
So if I ask you in very layman terms, do you feel that there is anything to worry about?
Absolutely no. Absolutely no. I think that made it very, very clear, thanks to the representation that is done by AMP as a body, and also the representation that has been done by various market participants, and also thanks to the SEBI, who is of course looking at everything more deeply to make it more apt and clear from an understanding point of view, and also now taking into account consideration of the industry representation and made it somewhat better than what is put it in the part of the draft report versus the final one. This impact is going to be is 0, I would say.
Okay, so that's the word coming in from A. Bala saying the impact could be negligible and nothing to worry about when it comes to the overall mutual fund and AMC space. But we have Shweta Rajani joining us on the show, Head of Mutual Funds at Anand Rathi Wealth. Shweta, hi, good morning, and thank you so much for waiting by. Give us your sense on, or rather your first take on these this overhaul that we've seen coming in from SEBI in terms of mutual funds, in terms of capping of the expense ratio. What are you making of this and the impact in your view?
Good morning. So I think, the consultation paper that came in October and what we are seeing in terms of the final circular, clearly the final circular is far more clear and brings in a lot more transparency. So from an investor standpoint, the way I'm seeing it, there could be a marginal reduction in the expenses, which means that they will benefit in terms of the performances that they see in their schemes, which is very good. From an AMC standpoint, there is complete clarity now on what is the statutory fees and whether it's going to be inclusive or exclusive of GST, and how do they tackle with the statutory taxes on that. And if I break it down and I see from an AMC perspective,
Okay. We believe we have Shweta on a patchy line. Bad timing there for that, but nonetheless. And you will have some of the AMC names in focus due to this. We'll wait whether we can get Shweta back immediately. Can we do that, or is this... Okay. Oh, Sanjay is still there. Okay. All right. Sanjay, talk to us about what kind of growth can we pencil in to offset this impact that we're seeing with regard to a BER. You suggested a 10% growth should offset it. Is that the right understanding?
Yeah, I think the overall my belief is that, let's say if I'll tell you about Prudent, if my earning is 90 basis point, and let us assume that my impact would be, let's say, about 2 or 3 basis point, then it's roughly about 4%, or probably less than that, 4.5% impact on my top line. So if my AUM goes up by 4.5%, then definitely I think it's going to be nullified. So I can tell you that's a very, very beautiful part of this industry. That the moment, because you are earning on the entire AUM, and there is a big part of mark to market which is inbuilt. And for the retail player, they have a very large SIP book also. So if you look at industry as 29,000 crore of SIP, and that SIP book always help you to grow your AUM regularly. So SIP plus mark to market, if you increase your AUM by 4 to 5%. So normally we tell these smaller guys that please, these are the changes which are good for the investors, good for the from a transparency perspective. So you might have some impact on your bottom line at the first stage. However, if you work a little bit harder and increase your AUM by 4-5%, then it will be nullified.
Okay, Sanjay, I appreciate that view. Once again, thank you so much for your time today. Really appreciate you joining in.